Stocks versus real estate. Which is the better investment? Or a better question, what's the best investment for you? But I want you to figure out, and I think watching this video can give you a definite answer. Hey, I'm Jay Leman. I'm a licensed realtor with EXP Realty, and I help people buy and sell their personal residences and also investment properties. And today I want to talk about what is a better investment, stocks or real estate. I love real estate and I do own stocks, but I'm a realtor and I help a lot of investors. So the obvious answer for me is real estate, but I want to share with you why it is real estate. It's not just because I'm in real estate and I own it. I truly believe real estate is a better investment. Before I get into that, would you smash the like button? Would you subscribe? Would you make a comment and tell me, what do you like better? Do you like better stocks? Do you like better real estate? And then whatever you just think at the end, comment if I changed your mind or not, or if I just solidified your position. So first and foremost, let me say that if you invest in stocks or real estate, congratulations. I think it's good to do at least something, and you're doing more than what most people would do. Because if you want to grow your wealth, you can't stick it under a mattress. When I look at stocks versus real estate, I like stocks because they can grow at an explosive rate. But I like real estate for the consistency that it can have. And the reasons I like real estate more than stocks are 3 or 4. And the reason I like real estate more than stocks is because of 3 key reasons. Number 1, real estate cash flows. Now I know the stock people will say, hey, there's dividends in stocks, but those dividends are peanut profits compared to the cash flow that you can get from real estate. Number 2 is that real estate, you're able to use leverage. Now you can use leverage in stocks too, which is really dangerous when using margin to actually invest in stocks. You get margin calls where you can get loans secured by the real estate at an 80% LTV. That's an 80% loan to value ratio. You can put $200,000 down for $1 million apartment, meaning that you only have to put 20% of the purchase price, where if I want to buy $1 million of stock without using margin, which is very risky and dangerous, if you don't know what you're doing, you're going to have to put $1 million down. Well, I like to buy more assets using leverage like real estate than I like to just use all my cash to buy stocks without margin. Number 3 are the tax benefits. What I love about real estate is I can get a ton of tax benefits. I can depreciate that asset over time, and I can use $200,000 to buy $1 million assets, but get the $1 million building depreciation off of that. Not just because I bought it for $1 million cash, because I got a loan to buy it for $200,000 down and an $800,000 loan. And even though I have a loan on 80% of it, I can still take all the tax benefits of the full value of the property. Try doing that with stocks, you won't be able to do it. And last but not least, the capital gains strategy versus the cash flow strategy. I mean, I usually only make money in stocks when I sell that stock and then my stocks are gone. Now I could make a good gain on it, but the stock is gone. I like the more passive income strategy, which is I'm going to keep real estate for the long term. It's probably going to appreciate over that time, just like a stock, but at a slower rate, depending on what area you're in the country. Certainly in the Midwest, it's probably going to be slower than stocks, but I'm going to keep that asset long term, and that thing is going to spit out cash flow month in and month out as long as I take care of the property and service the tenant in that property. So I like the cash flow passive income strategy over the capital gain strategy. But those are just reasons. Let me give you a real rock solid example of stocks versus real estate. Let's say you had $200,000 to invest and you invest it in the stock market, and you say you do an S&P index fund, and that $200,000 grows at 7.2% over the next 10 years, and you double your money. So you're at $400,000. I would say that's a pretty good investment. Some people would say no, some people say yes, but I think that's pretty solid. Let's say you decide to keep it in there for another 10 years. That $400,000, if it grew at 7.2%, is up to $800,000. Congratulations, you quadrupled your money in 20 years, which sounds pretty fantastic to me. But what would happen if you took that same $200,000 and you bought $1 million apartment building by getting an 80% loan to value loan? So you're going to get $800,000 loan, and you're going to put $200,000 down, and you're going to buy $1 million apartment. In this imaginary scenario, scenario. Let's say that this property never cash flows at all. It actually never appreciates, and you take no tax benefits from this property. All it does is break even, and over 20 years on a 20-year mortgage, it completely pays off the mortgage. You have the property free and clear. Remember, you bought it for $1 million, and in this imaginary scenario, there is no appreciation, so you have a property worth $1 million. Who made more money in those 20 years? You put $200,000 in the stock market that doubled every 10 years, and now after 20 years, you have $800,000. You put $200,000 down on a $1 million apartment building with 80% leverage, and now you have a $1 million apartment. That means without any cash flow, without any appreciation, without any tax benefits, you actually outgain the stock market by 25%. $1 million is 25% higher than $800,000. That's pretty astounding. And that's only one way you make money with real estate. We call that amortization or loan pay down. But let's throw in cash flow. Let's say over the course those 20 years, you average $50,000 in cash flow a year on that property. Now, initially, it might only be $10,000 in cash flow in that first year one. But by year 20, it might be $110,000 of cash flow. Let's say the average cash flow you have over 20 years is $50,000 a year. Well, $50,000 a year times 20 is another $1 million in income that you got from that property. So that's from cash flow. And let's say that property appreciates. Now, I'm not going to say that property is going to appreciate at 7.2% a year, because I don't think it will, at least in the Midwest. It certainly could in other areas. But let's say it appreciates at about 3.3, 3.4%. And over 20 years at 3.4, 3.5%, your property will double in value. So now that $1 million property that got completely paid off is not $1 million anymore. It went to $2 million. And remember, you got $50,000 a year on average in cash flow. 50,000 times 20 years, that's another $1 million. Now my property is worth $3 million, right? And remember, my stocks are worth $800,000 after 20 years. My property is worth $2 million, I should say, and I made $1 million in cash flow, and that's without me taking any of the tax benefits to limit my tax liability through depreciation of the personal property and the physical property and the real property on that real estate property. So without any of the tax benefits, I make about $3 million on the $200,000 investment into real estate. Or I guess you could say if that's your principal, I made $2.8 million. And if you invested $200,000 in the stock market, it grew to $800,000. You made $600,000. Now that was a lot of math. I hope you were able to follow all that. But in short, my final conclusion, I think this is the final say for me in this, and you may disagree, so comment down below if you disagree, that real estate is far superior to stocks. Now, I know they're drastically different, but with real estate, you have 4 or 5 ways you can make income: cash flow, appreciation, loan pay down, depreciation, and of course, the ever working power of inflation. Stocks, you're just hoping that it goes up. And if you buy the right stocks, I'm sure they will. If you buy the right stocks, you're going to make money. Only when you sell, and then those stocks are gone. It's really a matter of what fits best for you. For me, that's real estate. And if you want to get into investment properties, I would love to help you. I'm a realtor that specializes in working with investors, especially first-time investors looking to invest in the Midwest for cash flow. I'm a licensed realtor. I can help you out. I own single families. I own multifamilies. I've owned mobile home parks. I've owned storage units. I can help you find assets that cash flow in any environment. We just have to know where to look and know where to get the funding from. So if you want to connect with me, please comment below. My website's also there as well. I look forward to hearing from you. Now go buy some real estate, not stocks.